Hello and welcome to the very first Barbarian Investor Show, brought to you in partnership with Tip TV. This show is all about disruption and innovation, and for investors, disruption spells opportunity. Today's show is all about blockchain and crypto asset trading, and to explain more about this exciting new space, I'm joined by my co-host, renowned trend spotter, Zach Meir, and CEO of CryptoCompare, Charley Hayter, and CEO of blockchain-focused Coinsilium Group, whose shares are traded on the London Next Exchange, is Eddy Travia.
Hello.
Eddy, what exactly is blockchain and what are digital assets?
So blockchain is a peer-to-peer distributed ledger, and it's opening the way to a new generation of transactional applications. So it's basically changing the way we can transfer value, and it's creating what is called today the Internet of Value. So many attempts have been made before Bitcoin, which is actually the creator of the concept of blockchain, in the past to create something like digital cash. But the problem with digital cash in the past, so pre-Bitcoin time, is that as any digital asset, it's very easy to replicate. And so there would be a risk of double spending, of spending it many times, right? Like any digital asset or digital file that you would have on the internet. So what blockchain did is by creating a chain of blocks where you record all the transactions that are happening between the wallets of these digital assets, then there is no way to go back and change anything. There is no way to double spend. So it's really solved a very important problem that enables today anyone to send around the world digital assets such as, for example, Bitcoin. And what we're going to talk about today as well is all the other coins and other digital currencies that exist today in the market.
Right. Now, that's given rise to a whole new field of investment and trading, which is these crypto assets. And that's what your company, CryptoCompare, focuses on, isn't that?
Exactly.
Yeah.
We're sort of a digital data aggregator in the cryptocurrency space. So we take data from all the different exchanges and put it in one easy-to-use format. So if you like, we're like Reuters, Bloomberg, but of the digital currency space. And I mean, agree with Eddy on what he says, absolutely. But the one key thing about Bitcoin is it's permissionless. And that means anybody can do it from anywhere at any point in time. So that is the key fundamental behind Bitcoin.
But you're the aggregator of information, basically.
We're the aggregator, yeah.
So I don't have to go all over the place.
Don't have to go anywhere. You can see on our, people trade Bitcoin to US dollar in multiple places. We show you all the places that it trades in one place. So we're like a sort of information portal to the world of digital currencies.
I've never traded before. I go to your website, I see Bitcoins at $1,000, something like that.
Yeah.
I've got, that's okay. I get my credit card out. I buy one Bitcoin. I mean, I don't know anything about this at all. What's happening there?
So you come onto our site. We show you the different markets where the bid and asks are. So where the cheapest place to buy it is. We also allow users to review all the different exchanges. And as they can review all the different exchanges, you get a feel for which exchange is good, has the best user interface, the best procedures, the best sort of compliance procedures as well. So we allow you to sort of see a TripAdvisor for digital currency basically as well as one element of what we do. Sorry.
So there are more than, I mean, there are multiple currencies now, and they're also, I mean, we're referring to them as digital assets or crypto assets, but the actual trading of each individual assets is now something that is coming into its own, isn't it?
In essence, yeah. There is a bit of a bubble, as well as always with these things as they first start off. I mean, this is standard. Speculation is rife, so people jump on the bandwagon. You see a lot of inflated froth in the prices.
Right.
So that's what we're seeing, but to a certain extent. But there is also an undercurrent of something special happening here. You're piercing the veil into a new area of finance. And this is very left of field, very Wild West at the moment. But there are opportunities. So there's a potential, potential for high returns, potentially. What's
going to happen here? Say that going back to my maiden purchase of a Bitcoin for $1,000. Well, I get a receipt. Is it there forever? Is Bitcoin there forever? Is it something I can pass down to my grandchildren? And is it something which could be in 10 years' time worth $100,000, not just $1,000?
A lot of questions. A lot of places.
Very keen on asking questions.
Yeah, I know, that's your job, isn't it? Well, the Bitcoin could, as far as price speculation goes, that's anybody's call. I mean, I'm not going to put a figure on that in the future. That's difficult. As for transferring it to your children, yes, you can do that. That's easy to do. You can pass it down.
But it's not something like, in 10 years' time we look back and say, oh, we remember there was that thing called Bitcoin. It doesn't exist anymore.
This is the difficult thing. So you've had a first mover advantage by Bitcoin, but what you have done is you have created a whole new sort of way of transferring value across the internet, as Eddy said, and that's a new form of bearer certificate in essence. So you could see fiat currencies on a blockchain, which would then allow a whole sort of variety of new business models to be created. For example, microtransactions, so you would essentially change the way people pay for content. You can also sort of have different ways of creating tickets for events, in essence allowing people access to various things. So what you're doing is you're creating a whole new ecosystem that could take place. Bitcoin is the forerunner. It might be there for the long run, but there are other cryptocurrencies slowly chasing up behind.
But it's not going to turn into like VHS and Betamax that you bought it, you've got your wedding on a Betamax video, and you can't play it anywhere. Is Bitcoin going to end up like that?
I can't remember those days, to be honest with you.
Well, exactly.
Yeah, but it could do. There is always that risk, and that's why early stage investment offer.
How many different currencies are people watching and following on your platform?
This is the real difficulty. People saw Bitcoin. Bitcoin, you can fork the code. So it takes 5 seconds, you can set up a new Bitcoin in essence. But to reinvent a Bitcoin, which has happened with Ethereum and with Dash and with Monero, which have had strong runs of late, you have seen special features being added in. Ethereum has smart contracting capability, which means you have programmable money. You also have Monero, which has more privacy built inside it, and Dash as well too.
Yep.
That's a different story, that one there. These extra features allow the IRS in America is clamping down on various Bitcoin exchanges, so the more libertarian community that follows them is looking for new, more privacy-centric cryptocurrencies to move into. So there's a trade going on there, and also Bitcoin itself has had an ETF decision pulled back by the SEC, and so what you're seeing there is you're seeing people looking for risk on, risk off, looking for more trade, more opportunities in the space. Bitcoin at 20 billion, Ethereum at, well, now at 2 billion.
Market cap. Yeah.
So this is capitalization of the figures. People are saying, hey, well, this one has a little bit more value. You're starting to see a few more transactions on the value chain, on the blockchain, so it's, yeah.
But these new coins that you're seeing people trade, there's actually sometimes a purpose behind them, invariably. I mean, Eddy, you were talking about Melonport, for instance, which is a new coin.
Yes.
Explain how that works.
Well, I think before we go into different new cryptocurrencies, it is worth going back a little bit to the basics, because there are hundreds of coins on CryptoCompare, the platform that Charley has created. But in essence, at the beginning, first of all, you have to understand that in terms of perennity, right? I feel that it's a natural evolution of money. To go from cash to digital cash feels, it's an internet native currency in a way. So, for example, some of the coins, like you're mentioning, have a specific function, and for example, Internet of Things it's a new domain where, for example, you imagine that a wallet of a car or a wallet of your fridge, the Internet of Things kind of devices that are coming up, would more naturally start sending Bitcoin or start sending a specific cryptocurrency to another wallet than obviously pounds or euros or dollars. So I think in that sense, the analogy that we make today is between internet and blockchain and email and Bitcoin. So today blockchain is seen as a foundational technology, and what was email at the beginning of the internet, which means today you send email without exactly knowing what's behind the protocols, etc., HTTP, SMTP. It doesn't really matter. You know it's going to arrive. So with Bitcoin, it will work. It's working the same way. So for example, you can buy a Bitcoin and you can start sending half a Bitcoin or a fraction of a Bitcoin to your friend, to Malcolm, to me, etc. It doesn't matter where we are. You're sending it from a wallet to a wallet, and that transaction is recorded on that ledger called the blockchain. So in that sense, it is important to know that Bitcoin has never been hacked. The Bitcoin blockchain has never been hacked since 2009. There have been hacks in exchanges, in wallets, etc., which have a human failure aspect, but up to now, the computational power behind Bitcoin and blockchain, and the Bitcoin blockchain is so powerful, And Bitcoin blockchain is so resilient that it has never been hacked by anyone.
Well, touch wood. I wanted to get you, because you mentioned, both of you mentioned the fiat currencies. Central banks have been controlling fiat currencies at the maximum over the last 8-9 years since the global financial crisis. They're not going to take this. This is obviously a killer disruption on their model of printing money and doing whatever they like. Isn't something, and you mentioned the SEC, you mentioned these other organisations who don't really, they're part of the establishment, let's say. There's going to be a collision at some point when Bitcoin or these cryptocurrencies start becoming more important, or as important or more important than fiat currencies. Who's going to win?
Well, ironically, although the ideology behind Bitcoin from the start has been to kind of avoid, obviously it's decentralized, so avoiding central entities and of course central banks and banks in general. We were talking about direct transfer from wallet to wallet, right? But ironically, it could become a very useful tool for central banks for the simple reason that you have the blockchain records all the transactions. So basically, as opposed to cash, which nobody knows when you're giving bills to anyone, right? As opposed to cash, you can track it forever since the first transaction. And obviously, as you may have seen in the world, there is a tendency to demonetization, like what happened in India, or what some Scandinavian countries like Denmark are looking at, like removing cash basically from society, which of course could be practical when you go into negative interest rates. But anyway. Removing cash means that if you move to a digital cash solution, then central banks could theoretically, and some of them are looking at it, use the open source code of blockchain and Bitcoin to create their own digital currency, probably with the help of startups or companies in the blockchain world, and then have a central bank issued cryptocurrency for companies or people, etc. So it could move in that direction. So it's not really a win or lose scenario. It's more of a complementary and potentially parallel currencies.
Right. So the impression I had is that with Bitcoin, every time it looks as though it's going to have a big breakout and we're going to get to a new level, for some reason there's a collapse in Bitcoin. I don't know whether somebody's been shorting it or manipulating it or just keeping it unsteady enough so people just keep on the edge of their seat.
It's the nature of the beast. For every sort of positive bit of news, there's a negative bit of news. And the ecosystem is young, it's fresh, and so it's going to have these accidents and these trips and falls. But back on the sort of national digital currencies, that's a very key thing. You've got a lot going on in China at the moment. We're working with PwC to look at various ways that the tax efficiency benefits for a government to have a cryptocurrency in operation are huge. Imperial College are looking at something in conjunction with the Bank of England too, where you can essentially have some cash that is anonymous, so you can go and spend it on whatever you want to, wallet to wallet, person to person, shop to shop. But the majority of your funds are kept sort of. So actually, this is actually potentially giving power back to the central banks, and could do at some point, which is very much against the original ethos of Bitcoin.
So what's the best way of investing in this area? If you think this is a good area, I want to be involved, and this is going to be the 21st century's greatest, fiscal monument. How do I get involved? Do I get shares in your platform? What do I do? Do I buy shares of Coinsilium? How do I? What's the best way forward?
Well, that's a question we tried to answer more than 3 years ago now. In 2013, with a partner, I started an incubator in that space because there were mainly two choices at the time. I mean, either we could buy Bitcoin, and obviously that could have been a very good choice because Bitcoin was around maybe $50, $60 at the time in the spring 2013, and it's 1,200 today. So, but I was very much interested in the entrepreneurial wave that it could create. So there were only a few Bitcoin companies at the time. Like if you went on Angel List, for example, you found maybe 20, 30 companies. And today there's more than 1,500 companies related to blockchain or Bitcoin or digital currency. So the idea was, let's put that money to work to help startups build this ecosystem that's going to get built around Bitcoin, of which, for example, CryptoCompare is as Charlie was saying, is part of this ecosystem where you need information, you need exchanges, you need payment processors, you need wallets. And this has evolved today to more software as a service solution, enterprise solutions. So basically, we started investing initially in these transactional companies all around the world. And in 2014, we moved to London and we started investing more in blockchain platforms, and that's what we have been doing until now. And we listed on a stock exchange called Next, so it's a very interesting experience. And at the same time, we've been able to help 15 companies in the space. So we chose, in a way, maybe the hard way, the way where we have a lot of work and helping these companies. But a lot of people have chosen the way of speculating or keeping the currency for a long time, as an asset of value and storing it for the future. So that's obviously what CryptoCompare deals with: investors who just want to buy Bitcoin or any other coin that is available out there.
The cliche with the gold rush was that the people who made the big money were the people making the picks and shovels, and I'm suggesting that you're the picks and shovels people.
We're trying to be, yeah.
Yes,
That's the idea.
yes.
Well, for disclosure's sake, I think it's important that I point out that I have actually joined the board again of Coinsilium as a non-executive director, but Eddy's the guy who does all the work.
Right, that sounds like a very good arrangement.
Right, the area that we sort of move on to now is regarding trading these new coins. And you mentioned before there's a bit of a speculative bubble going on at the moment. What's causing that, and what kind of returns are people getting when they actually get involved in these new issues?
So ICOs are initial coin offerings, which are basically IPOs. They're incredibly blue sky thinking objects. People say, we'll issue tokens, and in return you have a share of future revenue in our particular project, or you have essentially equity in it. And they're setting these things up in new jurisdictions in Switzerland, in Estonia, and they have huge potential for returns, but people are seeing the hype cycle inside them. So people are buying these things early. £5 million, for example, for one of these ICOs happening in about 3 seconds. And you're seeing these things trade up sort of 100% on day one. So it's Snapchat on steroids, but
Right.
a whole new area of finance. So people don't know how to value these things. People don't know how to trade these things as well. There's a lot of very unsophisticated investors in the space who will just jump in because the price is going up. So that's a high warning that needs to be sort of taken. This is all widows and orphans beware. So stay clear, but it's interesting. There's something happening there.
And how many of these new coin offerings are coming out, and how regularly are they coming out?
There's 3, 4 or 5 ongoing at the moment. There's probably about 30 that have been through, and more than 50 last year. And then we've got sort of in the pipes probably about 30 that look to be sort of coming up. So that's a sort of...
Isn't the key here to invest very, very small, so you're not bothered whether it goes to 5 million or goes to zero?
This whole space, it's invest very small, but just be very careful. But you can get enormous returns.
It reminds you of the 80s.
It does, yes. Well, the time of the Betamax and the VHS, and also the stagging of government shares. But I'm not quite sure whether this is on the same scale or could be on the same scale as that.
What kind of, how many visitors do you get to your site, and what's the size of this market in terms of participants?
To our site, we get a fair amount each day. Probably sort of you're talking about sort of 40, 50 number, 50k per day.
50k.
Yeah, but in terms, but in the entire space,
Yeah.
in the ecosystem, for example, yesterday, Ethereum, which is one of the sort of more exciting cryptocurrencies that people are sort of piling into at the moment, you've seen its sort of its market share of trading drift up to about 126,000 bitcoins, so 100 mil. USD terms, which is about 50% of total volume, so 200 million in total volume yesterday on Ethereum. So that these things are sort of, and also as you look over time, people who are invested in Bitcoin, they buy these other cryptocurrencies looking for more yield. And then what will happen is you'll, over time, you suddenly see people coming directly into these new cryptocurrencies. So people, instead of going, I'll buy Bitcoin, then buy Ethereum, they go, I'll buy Ethereum direct, as the exchanges in the ecosystem start to offer these direct trading pairs, and as the liquidity comes in. So you're starting to see a whole sort of, all these rivers and tributaries sort of start to converge, and something becomes popular. Ethereum, for example, has seen its fiat market share, i.e. GBP, USD, and JPY and CNY, grow from about sort of 10% last year to about 55% of trading over this year. So that's the sort of switch in the ecosystem that you're seeing happening as mania takes hold. So
are we seeing multi-millionaires born in just a few seconds?
Absolutely.
And how's that working?
Yeah, absolutely. couple of our guys who used to work for us are now not working for us for that reason. So.
Right, okay. They've retired.
They retired, yeah, on imaginary money.
So what's going on behind all this? Why are people starting these coins, and what are you seeing at your side?
Well, it's important to note that there is a lot of preparatory work. So even if the kind of crowdfunding part of it may take a few minutes or sometimes a few days, and that's quite amazing in terms of how much money they can raise in such a short period of time, there is a lot of preparatory work normally involved. Even if some of them are still at the concept stage, there is a fair amount of software development and thinking into the actual concept that's going to be behind the reason why the cryptocurrency is created. And there is a whole ecosystem as well. So, for example, there are funds that are now focused on buying tokens. And I think the reason why sometimes there is a overhype on some of them is because they are more serious than others. So, for example, we were mentioning Melonport, which is a project that is supposed to create management tools, portfolio management tools, and how to manage different tokens. So basically, it's a token to help people manage tokens. But then you have tokens to add functionalities like Charlie was saying, smart contracts, new blockchains. Blockchains are open source initially, so new blockchains. So it is a crowdfunding tool, but there are real as well real reasons behind it. And so there are two aspects. There is a work that is being done by the entrepreneurs to create these companies behind it. And of course, because there is this kind of instant secondary market, then there is a speculative aspect on exchanges, which is tracked, for example, by CryptoCompare.
Okay, well, that's going to do it for this edition of the Barbarian Investor Show. Thank you very much for joining us, Charlie, Eddy, and Zach. I hope you've learned something and you're going to be a convert to Bitcoin and cryptocurrencies from now on.
I will try to be.
Okay, thank you very much for watching the show. We hope you got something out of it, and we look forward to joining you again soon when we're going to bring you another edition of the Barbarian Investor Show, covering all things disruptive.